Did you know that there are signs that help you get an idea of whether the stock market is more likely to go down versus up in the near future? That's what I'm sharing with you in this video. Hi, I'm Camille Gaines. I'm a holistic financial coach and founder of financialwoman.com. In this video, I want to talk about one of the tools that you can use to get a feel for where the stock market or bond market or any major market is right now, and that's stock charts. Now, before you say, whoa, wait a minute, hold everything, let me explain. There are two major ways that investment analysis is done nowadays. Almost everybody, all the financial gurus, the investment firms, use both of these types of analysis. The first one is simply numbers. It's called fundamental analysis. It uses things like the PE ratio, which you may have heard about in my other video that I did on the signs that the stock market may be headed for a correction. The PE ratio, the yield, the book value, things like that. It's accounting, it's numbers about the market, it's numbers about company earnings, that type of thing. So that's one type of analysis. The other type of analysis is called technical analysis. And technical analysis uses charts. You simply look at a chart and they aren't that complicated. And from the chart, you can get a really good feel for what a security or a market as a whole has done in the past. So you can get a really great visual and a really good understanding of what the market is more likely to do in the future. Now, no, there are no certain absolutes in investing. It's all about probability. But when you can look at a chart and get a really good visual and see how it's done in the past, it gives you a really great perspective of what the probability might be for the future, the near future. And that's what I'm going to share more about. Now, what I want to do is I want to show you exactly how to use a stock chart. So I'm going to take you right over to my computer. We are at stockcharts.com. They allow you to use their chart service. It has free charts on here. There's absolutely no cost. And I won't go into a lot of detail about the setup, but it's a really simple, basic setup. You'll see right here, here's SPY is that index. See, SPDR, S&P 500, that you've heard me talk about, the index, S&P 500 index. So here it is right here. And SPY, all I'll say in this video is that SPY, that symbol, that's kind of, you may have heard of a ticker or stock symbol, that symbol represents the S&P 500 index. So I typed it in there. And this is what's referred to as a weekly chart. That's all I really want to go into as far as the setup of the chart. And you'll see here along the bottom the time frame. So here we have going back all the way to 2007. And this is a 10-year chart, in other words, of the stock market as a whole. As you heard me say in my other videos, you can think of as SPY, or the S&P 500 index, as representing the stock market as a whole in the United States. So along the bottom here is the time frame, and you'll see the years 2007 through 2017. And then you'll see this is the price going up this line. So you can see how the price has moved over this time frame, this 10-year time frame. So if we look right here, that was 2007 when the market was getting a little bit, shaky. And then of course here's that big correction that we had in 2008 that ended in March of 2009. You'll notice that dramatic move off the bottom, and that's what the market does when it gets ready to turn around. It turns around. And it had that sharp bounce back, and it's really been going up ever since. I mean, it had these corrections in 2010, 11 that you can see in here that are very noticeable, and again right in here. And this one is 2015, 2016 time frame, and then it's just headed up. So but overall, this is an extended, time frame for the stock market to be moving up. These minor corrections, which I don't want to go into too much detail and overwhelm you, but if the market goes down 10% or less, that's considered just a little correction. It's no big deal. You know, these are little corrections. It's never going to go straight up. You'll see every year it has a little correction. But a bear market is when it goes boom, you know, straight down like that, or down more than 10%, I should say. Not straight down, because you'll see it doesn't go straight down. And here everybody goes, oh, look, the market correction's over, we can get back in, and then boom, boom, and it kept going down just because the country was in such a mess financially. And so ever since then, that March 2009, that's when everyone's referred to as this huge bull market that we've been in. So you can see how this gives you a really great visual. I think it's a real nice tool to use to understand how any market moves. You can use it for stocks, you can use it for any major market, bonds, real estate, or any other major asset. And all you have to do is come over here. This is again freecharts.com. I am in no way affiliated with them, and I don't get paid. You know, if you go here from the link, certainly as the time I record this, and you just put in the symbol, and you put in, this is a weekly chart again, and it's best for long-term time frames, which I recommend for people that, you know, are long-term investors or swing investors. They're not trying to day trade or make really short-term guesses about where the market's going. They're trying to get a really broad perspective of, you know, how the market moves, so that they or you can make better decisions about investing your money. So that's what I wanted to show you in this video. If you like this information and you found it helpful, I would love it if you would let me know that you liked it in the lower corner of the video, lower right corner of the video. Subscribe to my channel if you found this valuable and you want to see all of my videos. Thank you.